History isn't just written, it's forged. On January 22nd, 2026, the financial world woke up to a reality many called impossible. Silver, the poor man's gold, the metal that spent 40 years in the shadow of its yellow sibling, just smashed through $95 an ounce. This isn't just a price hike, it's a structural break. As the US market hit that $95 mark, the screens didn't turn red for a sell off, they stayed green. The short squeeze isn't a theory anymore, it's a furnace. Tonight, we look at how we got here, the ghosts of the Hunt brothers, and why the end in sight simply doesn't exist. Mixed guy here. Let's get into it. To understand the $95 hype, you have to understand the trauma of the past. For 45 years, the number $50 was the ceiling of the world. In 1980, the Hunt brothers tried to corner the market, driving silver to a nominal high of $49.45. It ended in Silver Thursday, a total collapse that left a generation of investors terrified of the metal. In 2011, during the European debt crisis, we touched it again, $48.70, and again it failed. But those were bubbles of speculation. 1980 was two billionaires playing a game. 2011 was fear of a collapsing euro. 2026, this is different. When we adjusted those 1980 prices for inflation, the real peak was over $180. For the last 2 decades, silver was the most undervalued asset on Earth, until the world actually needed it. The hype of $95 isn't built on meme stocks. It's built on physics. Every solar panel requires roughly 20 grams of silver. Every electric vehicle needs double the silver of an internal combustion engine. By 2025, the Silver Institute confirmed a massive 230 million ounce supply deficit. We weren't just trading paper contracts anymore. We were running out of the physical metal. Then came the Greenland catalyst. As geopolitical tensions between the US and Europe spiked over strategic resource claims, silver shifted from a commodity to a strategic mineral. When the US added silver to its critical minerals list last year, the smart money realized the government isn't just watching the price, they're competing for the supply. The $100 psychological war. Now let's talk hype. We are currently in price discovery, and that's a polite way of saying, the math has broken. The gold to silver ratio, which sat at 80-1 for years, has collapsed to 50-1. If it returns to its historical average of 15-1, the ratio found in the Earth's crust, silver wouldn't be $95, it would be $300. The $95 breach is the final gatekeeper before the triple-digit milestone. At $100, silver stops being a cheap alternative. It becomes a Veblen good. The more the price rises, the more people want it. Retail investors who missed the Bitcoin run or the gold rally are now pouring into silver ETFs and physical bullion, terrified of being left behind. So, is there an end in sight? The bears will point to the VIX volatility and say a correction is overdue. They might be right in the short term, but the structural deficit doesn't care about a cool off. Mines take 10 years to build. Solar demand is locked in for the next decade. We are no longer asking if silver can hit $50. We are asking how far past $100 it can go before the world runs out of affordable conductivity. $95 isn't the finish line, it's the starting gun. Welcome to the new age of silver.